Well, Kathy, to see of red this morning here in Europe, that's after 5 days of green, as, of course, despite German business confidence rising, of course, more than we'd expected. Blame the French here, even though the CAC right now is relatively unchanged, because it's really sinking in for investors like that President Nicolas Sarkozy means business when he talks about shunning bankers who don't accept pay limits. Now, that's really not good for sentiment for a stock 600 that is now up about 51% from our March 9th lows. Take a look at the indices there, and you can see the rally really pretty much getting wiped out, though bank stocks are still up for at least the day. The stock 600, take a look at that screen for you. It's now valued at 44 times earnings, and that's got a lot of people looking towards other assets like the euro, for example. A run-up in stocks, a global recovery, pretty much means higher yielding currencies like the euro are set to gain versus lower yielding currencies like the yen and, of course, the dollar. Stock specifically on the market radar, we've got ING, one stock to watch as the Dutch financial services company asks for final bids here for its private banking operations. They're asking for about $1.8 billion, according to people familiar with that deal. Then there are, of course, the earnings movers. You've got Natixis stopping the charts there. The French bank really rallying this morning after saying its parent bank is going to cover around $50 billion of assets with a guarantee. What that pretty much does is rule out any state aid for the bank and spells good news for European and more specifically French banks. But to add to the negative sentiment, you've got some bad earnings here. The WPP profits are down about 48% on currency swings, and that's even as, of course, Heineken beat estimates in the first half. Right now, earnings taking over the story, Scarlett.
Okay, thanks very much, Maitri.